Hey, good morning, everybody. Good morning, Tim. Good morning, Carl. Good to see you. Sue, very good morning to you. Stephen, hey, Mark. Hey, Najam. Good to see you. Hope everybody had a very nice weekend and looking forward to a new week. And we should get something a bit clearer on the dollar this week. So, looking forward to that with some significant US data coming up, ISM services, manufacturing, ADP jobs, JOLTS jobs, and non-farm payroll at the end of the week. So we'll go through that. That's my sort of driver heading into Friday's payroll event. We're also going to run through those dollar yen longs, gold shorts if you're able to get into them, euro dollar shorts if you're able to get into them, and dollar Swiss franc longs. I hope some folks were able to take advantage of that on Friday. Had a very nice trade off the dollar yen personally, and a nice short off the euro dollar. Got a little bit out of the gold. But then got stopped out at break even, so I missed that huge move. Morning, Ram. How did everyone else do? Did everyone manage any of that dollar yen? It's just, I think I'm just checking. I'm just going to check I'm recording here. Let me just, I think I'm recording. I'm just going to double check. Sorry, folks. I've been having trouble with this recording, so I just want to make sure that this is being recorded. Just 2 seconds. I think it is, but I'm not entirely sure. Thank you, Ram. That's great. I'm just going to put a backup in case because I've had problems with this. Dun, dun. Right, great. Oh, nice, TM. Euro dollar short. Good. Stephen, okay, you've been in and out of gold. Very good. No, Ram, it's just the euro data is just not in focus at the moment. We'll go through that in a minute. Okay, folks, so as we get into it, remember at a high level, there's really 5 core elements to good trading: trading psychology, knowing your macros, understanding sentiment, good technical execution, and then risk management. They're your 5 pillars. And what we focus on here is 2, knowing your macros and understanding sentiment. We then also have quite a little bit of focus on technicals, just getting those entries just right so you're not unnecessarily taking on risk. Now, in terms of our daily preparation, there's a few we use every single day. Obviously, the newsfeed and Squawk, the economic calendar, which tells us of upcoming data points, the interest rate tracker, and the implied volatility tracker, which gives us some really good levels. Let me just show you there in the options market. And just make sure you're aware of these levels, particularly for trading the majors. These are significant turning points, great for targets, great for entries, definitely reference points you should be looking at. Now, when it comes to macros and fundamentals, remember what we're looking at, and this is what you always want to be involved in. And the slight difficult thing with macro fundamentals is that it's kind of like a story that you need to be in tune with, right? So it's a bit like if you imagine you're reading a book, right? Chapter 2 follows from chapter 3 follows from chapter 4 and chapter 5. It works sequentially, right? And that's the way you think about the macros. What's the baseline and where are we in the current story? Okay. What will be the surprise and what's changed?
Just acknowledging the daily press briefing from the Russian Kremlin, noting they've got nothing to add about their agreement.
So, Ram, for instance, with the European PMIs, the ECB are meeting this week. There's no major kind of shift that's expected. Very little is going to surprise markets, whether it's a little bit higher, a little bit lower. So what? It's the euro is all being driven by the dollar story. It's the dollar that is in focus at the moment, and Fed interest rate decisions, not the ECB. Now, of course, that could change if when the ECB meet, right? They could give a new sort of direction to markets. If you look at the decision, you can see it's coming up February the 5th, so 3 days' time. They could surprise markets, but as it stands, it's just expected to hold.
Just further from the Russian Kremlin, it says that themselves and Ukraine have narrowed their differences on some issues, but not on the more complicated ones.
Okay, so let's get into it now today. So what are we looking at? So first of all, when you come to the session, straight away, look at the daily European RBA interest rate decision. RBA is expected to hike interest rates. We'll cover that and why it's not really much of a story for us, right? Now, the major decisions, right? So Asia Pacific stocks, several bearish factors, partial US shutdown that's expected to end today, right? weak Chinese PMIs, and NVIDIA's OpenAI investment stalling. So they had $100 billion, I think, of OpenAI investment that they're holding on, and that's just been weighing on US equity futures. Obviously the Nasdaq overnight, and we had weak Chinese PMIs. So slightly weak sentiment to start the week. The Dixie is range bound, but firmer from last week rather. Okay, we saw some dollar strength. We were expecting that, and we've started to get it. The thing with the dollar, we have this appointment of Warsh, right? So the markets are digesting Kevin Warsh's Fed chair. That seemed to be sort of dollar positive, right? And the reason it's expected to be dollar positive is it's keeping the Fed independent. And Trump sort of said he hadn't spoken about interest rate cuts with Warsh, right? But he probably will do. But that shows you he's not leaning on Warsh really heavily. And Warsh is seen as a sort of steadier, stable character, and not going to be responding to knee-jerk interest rate cut demands from the US president. And there was this discrepancy that's been building, which is like lots of dollar weakness on the dollar debasement trade, which was deviating from the macros in terms of short-term interest rates. And we saw that in the dollar Swiss franc, which is what I was pointing out a few times last week. Let me find it. Right, let's just go here. Right. And we had the yield spread pushing up as dollar was going lower. Yeah, Carl, it's going to be a tricky one. And we'll cover it, Carl. What's going to make that decision easier or harder? Harder, yeah. Of course, there's going to be a slight social pressure and a political pressure, but it's not seen as pronounced as some other members who could have got the job. And so that's why we're seeing a reaction in the dollar strength. Now, if you look, yeah. So if you look at this divergence, so short-term interest rate markets are saying, well, the dollar should be stronger, but the dollar was moving lower, that divergence. So the question is now, and this is like one of those, I don't know the answer to this, and no one knows the answer to, but I show us a strategy through it, is the dollar debasement trade going to carry on and markets just want to keep selling the dollar on, concerns about the Fed's balance sheet, the debasement of the US dollar, and the sort of the sell America theme, or are short-term interest rate markets something going to come back into focus? Right. My instinct is that short-term interest rate markets should come back into focus, because if you look at this week, look at the end of the week, and you see payrolls. Look, the US economy expects to add 64,000 jobs to the US economy. So jobs are still being added, and unemployment rate still relatively low, and average earnings still relatively high, right? So no major problem in the US economy. And also the last Fed meeting, the Fed sort of said, they're less concerned about employment at the moment. So they're quite happy that the labor data is supportive of interest rates at their current level. And so all of that is dollar supportive. Now, in order to, and then we had Friday, didn't we? That hot PPI print, producer price index out for the US. Was it Thursday? Let's have a look. It was last week. We had a hot PPI print. Let me find it. Sometimes it's hard to navigate this calendar. I can't remember which day it was. I think it was, there it is. There's the PPI. Yeah, so it came in hot out of the US last week. Right. So that's sort of saying, well, inflation's still a problem. And if inflation's still a problem, then the Fed are not going to be wanting to cutting interest rates. So all of that means, bottom line, the sentiment, until we know otherwise, is supportive of further dollar strength. So that's sell euro dollar rallies and buy dollar yen dips. Now let's just look through the FX, right? So that's the participants lack conviction heading into an event packed week. So we've got ADP jobs, JOLTS jobs, ISM prints, which are the most influential kind of PMIs, and we've got non-farm payrolls. So time for the dollar to move. Then we saw this dollar yen climbing higher following comments from Japanese PM Takichi on Saturday. Happy about the yen weakness. And we did see last week as well that the Ministry of Finance did not intervene in the dollar yen in that recent yen strength we've seen. So that tells you dollar yen could head back up to where we've come from. Right? But we do know the US is concerned about a weak yen as well. And that's mainly because of what's happening in the Japanese bond market. So in the very near term, we could just put to the back of our mind intervention about the yen just for now. And buying the dollar yen dip goes back into focus. Hence, you saw the dollar yen bounce up on that, right? People think, oh, okay, more dollar yen upside. Okay, it gets a bit overbought, overexcited, but the sentiment is still there. Obviously, gold and silver heavily sold. That's not a big surprise for us. We saw that coming in last week, and we've discussed, didn't we? When markets are that elevated and high, you can see sudden flushes lower. And there were good opportunities to get in on gold shorts last week as well. And I know some of us took advantage of that. Right. So there's also some oil news from OPEC Plus members. But really, the focus for me today is the dollar strength. So how do we turn that into actionable trade ideas? Well, then let's have a quick look around markets, see if there's anything jumping out at us. There's a couple of lessons here. So first of all, we're seeing some attempts at reversal at major levels in the DAX, Euro stocks, S&P 500. Right, so this is what to look for. Now, looking at this,
updates out of Shanghai, where it has launched a substantial purchase of existing homes.
This is two potential moves I'm seeing in Euro stocks and DAX. Both are acceptable, right? What you have here is a Harami inside bar, potential false break. Now, if this closes as it stands in this false break of that level here, then what you'd be looking for is a long from here, right, up to this level, potentially back up to the highs. But definitely as a one-to-one trade there, if you get a bullish close. Okay. We've got a long time to go before that, but just, yeah, I'll take a look at the Aussie US dollar. That makes sense ahead of into the RBA meeting. Let's just cover that because that's a good point. Coming up overnight, we have the RBA interest rate decision. Now you can see expectations for an interest rate hike, and the Australian dollar has been bought in anticipation of the RBA hiking rates. So it's kind of like it's been done, the Australian dollar buying. Okay. Yeah, S, exactly. Look at S's comment, folks. This is exactly the kind of thing. Right, what's expected, right? The RBA to hike interest rates, so the Australian dollar's been bought on it. Will that be a surprise if they hike interest rates? No. So will that change the bigger picture? No. So what might you see the Aussie dollar selling off? So you might see some Aussie New Zealand dollar downside on a buy the rumor, sell the fact situation. Exactly, right? So you could maybe look at buying the rumor further, like into the meeting. Fine. But that's what you typically expect. Great comment, S. Very timely. Well done. That's exactly the way I'd read it. Now, what would change it? Say if the RBA said, oh, we're going to hike interest rates and we see another interest rate hike coming, right? That would be when you buy the Aussie dollar. So if you look at current expectations, right, expected to go to 3.85%. Now, short-term interest rate markets are seeing, another interest rate hike this year, right? But say the RBA start confirming that and start saying, we need more interest rate hikes to deal with inflation, then you're going to see the Aussie dollar gain, right? So there may be an opportunity tomorrow for a sentiment trade, but going into it, buy the Aussie dollar into the meeting, but then expect to buy the rumor, sell the fact response out of the meeting, right? So we looked at that to look at that's for the DAX. So look at the DAX there. There's potential for that to recover. If it just keeps going higher, then okay, we've missed it. Fine. China 50 trying to put in a false break of this Harami inside bar, and Euro stocks trying to put in a false break of Harami inside bar. So that's setting up potential reversal, but we have to see because the day isn't out. So it depends on the daily close. There's some bids coming into the bond market, which is thumbs up, right? That's good. That is showing a little bit of calm. The recent sell-off in Japanese bonds created problems in US treasuries, which got everyone worried about dollar yen being pushed lower by the US. So a bid in Japan, good, right? That's calming. And looking at gold and silver, big drops. Remember we were looking at these trend lines and looking at potential entry areas and potential shorts. You can just see you got this trend line break, got a nice little area. That would be the sort of area to have shorted from, right? If you were looking for a significant break, going down through that level would have been it. Then copper, deep dip, silver, deep dip. So a lot of volatility in metals markets. Just stay out of them for now, right? We need to let them settle down. We'll cover now. What I want to show you in the dollar is something, a little technical lesson. So you see the dollar pairs. We've got these big reversals, reversals. And you might look at that and say, well, that's a hammer reversal. It's a bad hammer reversal. I'll tell you why. If you look at the Dixie, right, is it well formed? Yes. Is it a large tail? Yes. Is it like the potential for a V-shaped reversal? Yes. But the technical thing that's bad about it is you see how there's been a gap lower, and do you see how this body is not closed within that body? Do you see this hammer reversal? On one stage, you think, oh, they're the same. No, they're not, right? This is a superior hammer reversal because the close is within the body of the previous candle. That's the sort of hammer reversal you want. Yeah, exactly, Najam, right? So what you could easily see, and Najam's hit the nail on the head, right? And you could easily see is that this gap, I think that's the gap here, is a pretty major resistance level, right? So it means you got to clear that gap. Yeah, right? It is. So it's volatile. It's not nicely formed technically. You see, what you look when you get these hammer reversals, you want to have them. This is in one sense, like it is nicely formed, but the fact is the close isn't within that body. The only thing that's going for it is the length. When you have them very, very long, they tend to offer like decent support. So, do we ignore it? No, right? Obviously, we don't ignore it. It's a clear kind of reversal. And I am expecting the dollar to reverse, but at the back of my mind, I'm realizing that this is not as strong as you'd think. So what you could easily get here, and you can see on the euro dollar, is you might find this kind of reaction. Yeah, it was just that dollar debasement trade, Ram. It was like it was stretched. It was how much longer can it go on? And then you remember, like we had the hot PPI, and then we have short-term interest rates still moving up. And you remember from last week, I was saying I'm expecting the dollar to recover. That's my sense of this. And so you've seen that's partly true. Now I don't know which way the market's going to go. Obviously, I'm not like a fortune teller, and the macro story is mixed. You see, so we have to sometimes you have to use your common sense to work your way through it. But what you often see in this kind of scenario is that. So it's just a little technical lesson. And you see that candle there. Do you see how impulsive that buying is? Right? It just means, and impulsive that selling is, that there's heavy interested big sellers there. Whereas when you had this reversal, the sellers were like, yeah, a bit of selling, bit of buying, bit of selling, bit of buying, you know what I mean? Here, sell as hard as you can. So we've got to be aware of that. With that all being said, let's go to the daily. Right, there are some opportunities here. So technically, first of all to look at now, so from last Friday, we had that dollar Swiss franc longs workout. We'll look at these in a minute. In fact, you know what? I'll go and look at these on the other chart. It makes it easier. So first of all, let's look at dollar yen longs. So the dollar yen longs from Friday worked out very nicely, right? And I've got that still running in from around this level. Let me just find out the exact level I got in on 85. So I got in on the 85. So that's thereabouts, right? So you got 4 or 5 points. Got in there very nicely on that pullback, just down here. And you can see that that's currently at a 17 to 1 risk reward, right? And has been as high as a 26, 27 to 1. So very nice. And I'm now looking at a new level for dollar yen longs, right? If you look at this, and when we spoke about this, that is now that coiling price action. That's a harami inside bar, and that is an 3 inside bar up pattern. That now means that with this 3 inside bar up pattern, really the other way, that's a breakout from a range, right? But this, right, means that this area here, a retracement to that level, is now what I call a hot zone. So if we get back down to 154.08, 154.09, I expect that level to hold. So the strategy is this. So I'll be looking to add further longs, right? So that position, right, I took 50% off on the way up. So I leave it to break even. I've now got a new long potential at the 154.09. So they're 5 point stop. And if I get a retracement, that is that hot zone level. See, it's a range breakout essentially. So try up to 3 times long dollar yen from there. Okay, so that's trade number one. And I'm leaving that original position, which is up like 95 points at break even. So that's dollar yen. Now let's look at euro dollar. Now euro dollar, oh sorry, euro dollar is slightly different. Technically, ever so slightly, and it's an interesting difference. Same principle, Harami inside bar, Harami inside bar. Remember, we were looking at the retest of that level, and we were looking at the 1950 region. So that was our area, right? In straight away, and it's straight in. Beautiful trade. And I'm still holding that. I've taken most of it off, but I've still got some that I'm holding on, and see if we can keep going lower, right? Now, and that's currently sort of 18, 19, whatever it is, risk reward. So just those two trades like from last week. Fantastic. Now, what you're looking at here, again, technical trick, is that you see that level there? You see it's a Harami inside bar, Harami inside bar. Now, we're very close to a break there. Very close to a break. But I would say just look at this level next at the 1.1897. So if you look at this level here, the sell is now, right? So that, okay, that position up, 100 points, whatever, just under, is now your opportunity. And you see you got that swing point here. So this becomes the sell for today. And you're looking, again, 5 point stop. If you go up to there, 9.4, you do the big round number. And I think no, 9.4 is all right. And you try up to 3 times to sell the euro dollar. And so they're the two trades I'm looking at today. Gold, just to recap, we had that sell from this level here, right? The 5,100. Great, got a nice little move out in that, and then got taken out of break even. So that's gone. But that level's still pretty good. And now what you're looking at is where's another technical area where you could potentially, right? See, now the thing is, I'm going to leave gold alone just now because it's just become too volatile. And kind of when you have that volatile move with such a small stop of 4 or 5 points, I want to see something clear start to form again. So I'm just leaving gold alone. It's had a decent pull lower. And now, the liquidation has occurred of a lot of positions. And now if it wants to go higher, it can start going higher. We'll see. The dollar strength story is keeping precious metals subdued for today. So now let's look at the calendar. Anything up ahead that can sort of move things. So the RBA cash rate, nothing expected. Expect Aussie dollar strength into the meeting ahead of the decision. We expect to buy the rumor, sell the fact, unless we have anything different. We'll cover that tomorrow. Looking at the ISM data, the manufacturing data is less important than the services data that's coming later in the week, but this is still important, the ISM print, particularly looking at the prices paid and the new orders, and particularly looking at how that responds to US inflation. So this is strong inflationary. So if the prices paid jumps up and the manufacturing PMI are within expectations, on balance, you'd expect that to be dollar supportive. There's also the geopolitical story about the US shutdown. The partial US government shutdown is not expected to last long. So if it does last long, then that can weigh on risk sentiment as we head into the week. But for now, the focus is on the dollar. Will it keep being bought? Unless we see some definite reasons to sell the dollar, you'd expect the dollar to be bought, right? On the hot jobs data that's not hot, but the growing jobs that we're expected to see at the end of the week. So we're going to carry on chasing this long USD story with Warsh also being chosen. The other sort of significant things to be aware of is the interest rate decisions we have this week out of the Bank of England on February the 5th and the ECB coming up on February the 5th. So we have a busy Thursday and we've got the RBA meeting this week. So it is quite busy for central banks. But apart from that, that's all that I'm seeing around and out there. Okay, folks, has anyone got any questions? Anything else anyone wants to we need to go through? But I think that's the way to look at it. We did have that dollar Swiss franc long as well from Friday, but I don't know if anyone was in that or not. And someone was asking me about that Aussie New Zealand dollar short trade. Yeah, so that's for oil. Let's have a look now, Jam. We go and have a little look. Big picture is oil's being pushed and pulled around on Iran headlines and supply issues. Big picture, you'd expect oil to keep moving lower. So I'll be looking for opportunities to sell oil. You've got this inside bar break. You've got this little trend line here in line with a gap. Yeah. So technically looking at this would be, I would try shorts from here, S1 pivot point as well. The 64.26, and I would give it like an 8 point stop, and I would try up to 3 times like that. All right, I'm on there, Jim. Yeah, I know you got some good trades out of all last week, and I know that'll be very intuitive to you, that level. You see the beauty of that. That's where you just get your risk absolute minimal. All right, folks, that is all for now. Do take care, and I look forward to be scheduled back again tomorrow. For those of you in the futures room, see you later. Yeah, cheers, TM. Cheers, Carl. Bye for now. Oh, shit, pound Aussie. The problem with the pound Aussie is you've got the RBA interest rate meeting coming up. What are you looking for, Stephen? Have you got a set up a bias for it? I would naturally stay away from this because the spread, right, is going to be a bit higher. What are you looking at, shorts or longs on it? Long. I don't know. Yes, I understand you. It's easy. That sort of fear of missing out. A very common problem. It is easy to do. The key thing is to look at it and think, well, hang on, let me work out how to do this better. And it may be like you need to implement a way of executing your trades in a different way. It can be hard to be patient, right? That's the difficult thing. Because sometimes, we're looking at these levels in dollar yen, euro dollar, you may not get them hit, right? And so you've got to be patient, and that can be hard. But well done for sharing. It's helpful. When things go wrong, it's helpful to share it here as well, because yeah, gold, yeah, and so volatile. It was very tricky with gold. The pivot points, you just use them like support and resistance, Ram. Exactly the same. Consider them intraday support and resistance levels. With pound Aussie, Stephen, I just don't have a clear bias. If someone's put a gun to my head and said, you've got to be long this, I would look at this level here, and New Zealand dollar. What it is, I'm not fully tuned into the macro narrative for the RBNZ and the Bank of England, so I've got a clear sense of it. That's the problem. And that's normal, right? It just happens sometimes, analysts can be good at certain things and not others, or you're going to know one thing and not the other. So if we want to have a quick look at the yields, sometimes the yield spread can just give you a little clue. So there's nothing screaming out to me here on the pound Aussie dollar. Obviously, if there's a buy the rumor, sell the fact response, then pound Aussie dollar does make a bit of sense, but it wouldn't be one for me. Let's look at pound New Zealand dollar. Nah, just
industry is on the wires.
Sorry, Stephen, Najam.
Says US is currently being
reviewed. I haven't got anything on it, and it's not something that's jumping out at me. Now this is a scenario. It doesn't mean because it's not jumping out at me that it isn't jumping out to you. Because if you've got that macro bias, and I know Najam will have this, because he will. If you've got this in place, the baselines to the price, the bigger picture. If you've done your macro research and you're confident that the pound is going to be gaining right against the Aussie on the New Zealand dollar, then fine, right? You go for it. Don't worry about it. And this is normal. I remember when I first started learning to trade, you'd have your trading sort of mentors or the people you respect, and you'd think, oh, the flag pattern Ram. Yeah. When you see that, and when you think, well, I suggested a trade idea, they didn't go for it. I think, oh, I'm sure I'm right, and I would be right, and that's a normal part of the process. Because I haven't got a conviction, but the reason I haven't got a conviction is I'm not really tuned in absolutely clearly to what the RBNZ 100% doing, what the Bank of England 100% doing. There've been more ones I've been I've been keeping on the back burner because it's been such a dollar-led story. And I've been focusing on that. So I hope that makes sense. Why you might have a really good macro outlook that just hasn't come across my brain. And obviously, I'm looking at futures markets, lots of different instruments, sometimes stocks. I will miss things. I hope that makes sense, folks. I hope you can understand the reason for that. Yeah, very good for those large language models, AI, because you can quickly, nice little indicator chart pattern thing. Yeah, very nice. Thank you very much, Stephen. Focus on the flag pattern, high and tight flag pattern. That's one to focus on. It's very forgiving, and you can use a very tiny stop on it. I'll just give Najem a moment to reply to you, Ram, if he's got a second, and then I'll close up the session. But don't remember the opportunities we are looking at today, right? That 15409, a 15-minute time frame for intraday, and you can use it for daily for swing trading, Ram, and the 195, 194 on the euro dollar. So they're the two trades that I'm looking at today, okay, folks? Euro dollar and dollar yen. I'm looking to add to my dollar longs. Over and out, folks. And we can look at this another day as well, so don't worry about it if you can't, if you don't get all that now. But I'll give you 5 seconds to copy and paste and go through the course, Ram. Okay, if you go through the course, when you've gone through the course, you'll intuitively understand the prompts to give to AI, for instance. All right, folks, take care and see you later. Bye for now.